Hi, thanks for joining me. I'm Jennifer E. Goldman, and I run Jennifer E. Goldman LLC, management consulting for nonprofit organizations. And first, I want to thank all of you who have subscribed to my YouTube channel. It is so flattering to see all of you coming in and watching. And definitely a big thank you to any of you who have suggested topics for the videos. And if you do have any suggestions going forward, please leave me comments. I love it. I'm so grateful that you're invested enough to invite me to bring on different topics. And I have been reminded by one of the ladies who came to one of my seminars where I teach about financial planning for nonprofits, budgeting, fundraising planning, strategic plans, all of the things that are monetary based that are included. And one of the tools that I like to use there is called Variance Report. And she suggested to me to create a video about it because she thought it was genius. She loved it. She wanted to take it back to her board, but then she couldn't remember how to describe it and how to implement it. So this is for you and for everybody else who could use this tool. I love it so much. It's a really easy way to take a look and analyze how your organization is doing financially during any given year. So I'm going to share my screen with you, which is something I don't think I've ever done in one of my YouTube videos. So let's see how this goes. Okay, let me move my menus now so I can see the thing myself. Okay, sorry, just bear with me here. I'll make this bigger. Okay, so I created a really simplified, oversimplified variance report here, just so I could explain it to you briefly. Yours is going to have many more lines than this, I assure you. What you see here is several columns, the items by income and expense. Then we have the fiscal year 2022 approved budget. I use that year because I know some of you have a fiscal year July to June. So you're now in fiscal year 2024, but some of you use the calendar year. So I wanted to choose a year that I knew at this point in time, everybody has a full 12 months worth of figures. So in that first numeric column, you're going to put the approved budget for the full fiscal year that you have completed. And in the column next to it, you're going to use your actual figures. So I don't know what kind of bookkeeping or accounting programs that you use, but hopefully this can come up with a report for you that will have all of your actual figures, what you actually brought in, what you actually spent during that fiscal year. For some organizations who are using a calendar year, that last full fiscal year will be 2022. So you're putting the approved budget figures next to the actual figures. And then the next column to the right is the variance, which is really just a fancy way of saying difference. What's the difference? When you said you were going to bring in $50,000 from the town and they gave you $50,000, the difference there is zero. And then I like to use variances in percentages. I think it's much more indicative of what the greatness or minusculeness of that variance is, more so than the dollar figure. So the example that I usually give in my workshops is if your variance is $100, you don't know how significant that is because did you expect to bring in 500 and you brought in 400, where that $100 is, what is that, 20%, I guess? Or was it $100,000 and you brought in $99,000, $99,900? So that $100 variance, I'm not even going to try to do the math in my head, but it's much less significant at that point. So we want to see the significance in what we brought in compared to what we had planned to bring in and what we plan to expend. So you'll see that I put the dollar figures there too, because some people do like working that way. I prefer the percentages. You can do either or, you can put in both like you see here. So one of the things that I recommend for everybody using this variance report is to sit down with whatever committee is making your budgets. Whether that's the executive committee, maybe you have a financial committee. I don't know who that is, but sit down with all of those people and decide what variance you're comfortable with. You don't want to go through, in this case, there's only a few lines. It's not that big a deal, but when your report is yay long with 100 lines in it, you don't want to nitpick over every single dollar. So come up with that variance that you're comfortable with. For some people, that might be 10%. For some people, that's 25%. Figure out collectively what that comfort zone is. And what you want to do is analyze figures that are outside of that comfort zone. So obviously, we're not going to really analyze the town contribution. We brought in exactly what we said we would do. But then if you take a look at the next line, you see grants. Well, we approved a budget of $50,000 worth of grants. And we only brought in $40,000 in grant money, which is a variance of $10,000 or 20%. So for me, my variance comfort zone is probably going to be around 12%. So I'm going to want to look at this because 20%, that's a significant variance to me. Why didn't we bring in $50,000? Did we not apply for $50,000 worth of grants? Were we not approved for all the grants? Or maybe we were approved for all of them, but not at the level that we applied. And so in investigating some of these things, you're going to want to bring in the people who know. So if your finance committee was not responsible for creating grant opportunities, then you might want to talk to your grant writer or whoever was responsible for that. And this is not about pointing fingers. This is not about, well, why didn't we do this? Why didn't you do that? It is about, let's figure out where this difference is coming from because our planning was off. Because if you take a look at the big picture here, you see the subtotals in income. We brought in $13,000, or I'm sorry, there was a variance of 13% in what we brought in negatively. So there were $33,000 that we had planned to bring in over the course of a year that we did not. We fell $33,000 short of our income goal. And for the expenses, we have $9,200 that we spent over what we had planned. So if you look at the total variances in income, it's 13%. Not huge, but significant enough to take a look at. The total variance for the expenses were 6%, not very significant. But if you take a look at how that nets out at the bottom where it says total in bold, you see we had planned to net 92,800 at the end of the year. But because of those variances, we only netted $50,600, which was a variance of $42,200 or 45%. That's huge. So even though some of these little variances in there, you go, that's not a big deal. But when you look at the big picture, we came out 45% less in that year as our net revenue than we had planned. That's a big variance. That means $42,000 that we may have planned for next year and some of our projects we now don't have. Where is that money coming from? So what we want to do in exploring these variances is figure out how the planning process could go better next year, how we can ensure that next year, when we look at the next variance report, the differences are much smaller. Because what we want to do, whether good or bad, and so I've seen some variance reports, you thank your lucky stars, but in some cases, people come out so far ahead, the same amount of food might be 45% over what we had planned. And that's still something we want to investigate because we want to be able to predict our future. We want to be able to plan for our future and the growth. While it's always obviously better to have more money, we still want to know why. Why did we make so much more than we had planned? Is there one where we did? Yes. So in individual donations, you can see we had planned to bring in 50,000 and we brought in 60,000, which is a difference of 20%. So again, for me, if my variance comfort zone is 12%, that's 20%. I still want to look at it, even though it's positive. I want to know why it was more. Did we excel at something? Was there something, extraordinary about one of our fundraisers? Is there something we can capitalize on so that next year we can plan that we know that donation we're going to bring in a lot more than we expected? So let's raise our goal. Let's leverage what we have here. And so the smaller the variances, the better you're planning and predicting your financial future of your organization. So this is the sample here. I encourage all of you to put your own together and sit down with your finance committee, whoever that is, whoever's taking care of these numbers for you, and exploring the variances of what your organization is doing so that next year you can plan to bring in and spend closer to exactly what you plan so that you're creating that financial security for your organization so that you know where you're headed and where you are. I hope this is helpful. If you have questions about this, because I know it's a lot in a small amount of time, please add your comments and your questions in your comment section, or reach out to me. My contact information is in the bio of the YouTube channel. thank you again for joining me, and I hope to see you again soon.